So what's up, guys? This is another new video on Max FX YouTube channel. Don't forget to subscribe and like my videos to see more content like this. So now this was USDJPY on Monday. How I was able to catch this trade, although this was a news. That's why you can see this fast move, this fast snipe. It was a news. I was lucky enough not to get stopped out because at this point, even though I implemented my strategy so hard, but sometimes the news do go against traders. So, but lucky enough for me, I was still able to be on the trade. So now, this is a 5 minutes time frame, like I told you. If you switch over to 45 minutes or 1 hour, you see that there are no clear traces. Remember, if you go to the 4 hour, the USDJPY was on an uptrend, so my bias already was to keep buying USDJPY. So back to what I was saying. So on the 5 minutes, or let's say on the 15 minutes time frame, if you watch closely, the market was on an uptrend. I've already identified it here by writing it down, which is the downtrend, series of lower highs and lower low. Let me push it to the side. Let me go to the 5 minutes so you can see it clearly. So I've written it down already. Series of lower highs and lower low. Why did I say so? Now, watch this out. This was the last high. Higher low. Sorry, lower low. Lower high. Lower low. Lower high, lower low, lower high, lower low. This was the last low right here. This was the last low, as you can see. Remember, higher highs and higher lows is for the uptrend, while lower highs and lower low is for the downtrend. If you watch closely, this high, this low, after creating a lower high, it broke the last low, which is a lower low, created another lower high which is not above this last lower high, broke the last low, making it a lower low continuously, making generally a downtrend. You get? So now to mark out my own market structure shift, remember we are generally on an uptrend, but this is the previous, or let's say the downtrend that we are inside the uptrend on our bigger time frame. So this is a 5 minutes time frame. So now this is my market structure shift with this zone. I marked out this high because that was the last higher low that broke the last low at this point. So this is my lower low. I marked it out as my market structure shift, this zone, as my MMS. That is my market structure shift. Then the first pullback. Remember, I told you guys that some people will come and mark out this zone as their pullback. You get, and they will be looking for entries here because this pullback has not mitigated in this zone here. Do you understand? So now watch out. When market got to this level, it closed down with a wick. It was not broken. Created a doji. It's not still yet broken until when you use this candle to close with a full body candle. Then now I've concluded to myself that market has broken that zone. Now I'm looking for any possible pullback. You get, which is this. That is my inducement. That's what I really pay attention to. I don't really pay attention to a lot of things. Like I told you guys, I only pay attention to one movement, or let's say one breakout, once it's a market structure shift. But once it's a break of structure, I intend to look for double break of structure or even triple as possible. So now what do? After market has created this inducement, this is an breaker block over here, but it has been mitigated with this inducement, or this is a whole lot of liquidity. You get this zone now down to this zone. They are all liquidities. That's why I use this one as my inducement. So now what is the closest point of interest to my inducement, which is this other block right here. Now I marked out the other block. And so as you may have it, market didn't return back to the zone until during news. That happened on Tuesday, that's yesterday, that pushed the market down to my entry, triggered me. Lucky enough for me, it didn't stop me out, because like I said, most of the times news do go against your setup. Do you understand? So lucky enough, it didn't stop me out, and it rejected back straight to my TP. It was not even up to 5 minutes. That was a very quick trade. It was not even up to 5 minutes, and boom, I'm out of the trade. That was 1:10 risk to reward. Remember, this is on USD JPY. Like I told you, market structure shift, inducement, point of interest. These three key things: market structure shift, inducement, point of interest. I know I don't like making my videos so long, but I just hope you guys understand. This is just how I was able to catch yesterday's trade. Like I told you guys, very simple. Don't try to make your things complicated. See how my chart looks. Don't try to make your chart so draw a lot of lines. It's going to scatter a lot of things from your view. So that's just basically it. Keep it simple, keep it clean, and you basically understand what you're doing. Make sure you don't forget to like, share, and subscribe.